Yeah, good morning, everyone. So, Friday US market again saw corrections. So, if we remember Thursday, we had seen very sharp bounce back, and from Wednesday level, Thursday first market declined sharply in expectation post the uh, inflation figure and all. And then the market bounced back very sharply, indicating some short covering. But Friday, we saw market again correcting. Similar concerns of inflation and all. Result from financials which were expected to support the market has not done well. Though JP Morgan reported good number over there, but Morgan Stanley results were weak, and that has resulted into whatever the gain of around 4-5% JP Morgan has got. On the other hand, Morgan Stanley was down by around 4-5%. So that has dented the sentiment, and on Friday closing, it was somewhere near to Wednesday levels. Apart from that, US futures are a bit positive, but Asian markets are indicating negative trend, with most of the Asian markets are down by around 1 to 1.5%. In Asia, China Congress, which meets every 5 years to decide about the leadership, is conference is going on, wherein the chief, that is Prime Minister, has indicated some uh, trend which are having some impact on market, wherein he had said that China is more focusing on self-sufficiency than on very aggressive on growth. So they are not very aggressive on growth and are focusing more on self-sufficiency. So that had some impact on metal there. Uh, Iron ore is down by around 2%, and steel is down by around 1.5% in today's morning China. Apart from that, even they had indicated that they will not be very aggressive in adoption of renewable and all, and will be looking more for energy security, as we had seen in recent past crisis on power side in China as well a lot, which has taken this step, like they will not be very aggressive in transforming to renewable energy than from fossil fuel. So that is again one of the things which they had indicated. So in all, what we see that the negative trend in Asia will also get reflected into Indian market as well. So we may see some down opening, and then look, maybe sustaining this downtrend. So now I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. Friday we saw that market trading higher side, and then second half we see the profit booking in higher level. Nifty almost reach 50 DMA. But we already mentioned in monthly report, and we already mentioned in daily morning call. Nifty have upside immediate resistance around 17,400, 17,450 in upside, and downside range around 16,900 and 16,700 at downside. So we expect Nifty trading with this range. With in today's session, we expect a gap down open after global close. But if Nifty close below the 16,930 level, then we see the further sell off towards 16,700, at downside. And upside intraday immediate resistance place around 16,000, 17,270 and 17,300 in an upper side. Bank Nifty also face immediate resistance, and last weekly close near the 50 DMA, below the 50 DMA. Immediate resistance face around 39,750, and downside support place around Bank Nifty 39 100 first, and 38 800 at downside. And we saw that both index trading in higher resistance level, and again saw that profit booking in higher side. Nifty Finance also trading near support. That is first support place around 17,660 and 17,590 at downside. Upside resistance place around 17,820 and 17,920. In stock specific, ICICI banks, we saw that last 1 week facing resistance around upside 870, 870, 8 in upside, and trading that resistance level to be if ICICI bank again break below the 860 level, then we expect further sell off towards 840, 840, 842 at downside. ITC also face immediate resistance around this level. 335, 338 is the immediate resistance, and below 328 again, it showing weakness. Then we expect the further pressure towards 320, 316 at downside. Uh, Positive side, we saw that JNFC looks positive at current level. To those have position, they can keep a stop loss its current level. That's it for technical derivatives I can carry.
Yeah, thank you, Vikas. On the derivative front, looking at the open interest, it has come down, which thankfully shorts have been covered in the last trading session. Also, the India VIX has come down significantly from 21 odd to around the 18 levels, a 10% decrease, which is very good for the markets. Also, you are seeing that 17,000 put continues to have the highest open interest amongst puts, and good amount of open interest is being built in. So that is a good sign for the markets. Also, the 17,200 strike is PCR is just going above one. Just it is just below one. It is likely to move above one in the trading sessions going forward. Also, the PCR overall PCR is below one levels, which is at comfortable level. So all in all, these are positive signs for the market. Even though we are opening down for today, we might see good support area coming in from 17,050, 17,000 levels, and from there you can see some bounce coming in up to the 17,300 odd levels. So look out for the same. From the stock specific front, IT sector did very well. Some strong short covering action was seen in L&T Technologies and Infosys. Likely to see more buying in the coming trading sessions. So that is one thing one should look out for. Also, HDFC Bank has some longs built in, so some more buying can come in into the stock going forward. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Today, one IPO will be listing Electronic Smart India or EMI. We had given a subscribe rating, and the IPO was oversubscribed almost 72 times. Price band is 56 to 59. Total issue size is 500 crores, constituting entirely a fresh issue. EMI is the fourth largest retailer of consumer durable and electronic items like AC, fridge, TV, mobile phones, laptops, etc. The top three being Reliance Digital, Chroma, and Vijay Sales. And but in the south of India, this is the largest player with main presence in Andhra Pradesh and Telangana. USP of these big companies is the scale at which they operate. For example, EMI will be selling goods worth almost 1,000 crores for their largest OEM brand. Thus, for that brand, EMI is a very important sales channel, so that OEM brand will price its product in such a way that EMI is able to make good margins and successfully compete with other competitors and small mom and pop stores in EMI's locality. business model of these large players is such that they will make about 5-6% kind of PBIT margin and generate around 3 times asset turns, thus coming to an ROC of between 15 to 18%. So that is the steady state potential. Um, but in terms of growth, most of these players are, including EMI, is growing at upwards of 20%. On comparing it with other listed retail companies, we note that V-Mart and Shoppers Stop have similar kind of return ratios and growth profile and trade at EV to EBITDA of over 30 times FY22, while EMI is being offered at just around 10 times. So we think that the issue is attractive and it is expected to list at around 95 odd rupees versus IPO price of 59. And over next 1 odd year, we think there could be even further upside from the listing price. So one can look at holding on to if they're getting allotted, or even can look at buying if the listing happens at a lower price. Federal Bank numbers were above estimates on all fronts. Loan growth and NII growth was healthy at 19%. OPEX growth was controlled, which led to pre-provisioning profit growth of 33%. Asset quality remains one of the best in the industries with slippage ratio of just 1%. ROA touched 1.2% for the first time after many years, and this looks sustainable. So basically the bank has broken out of the upper cap on ROA, which the street actually did not believe that they could post 1.2% kind of a number. So now I think a street will digest this, and there could be a good re-rating potential over here. Stock is trading at 1.1 times FY24. We think it can re-rate to 1.4 times over the course of next 1 year. So we are positive on Federal Bank. HDFC Bank result was in line with expectation. Loan growth was 23%, NII growth was 19%. NIM is recovering slowly to 4.3% after bottoming out at 4% 2 quarters back. Lower treasury income led to pre-provisioning profit growth of 5% only. However, lower credit cost led to profits growing by 20%. Asset quality remained stable with slippage of 1.5% versus 2.1% in June quarter. Slippage has been in the band of 1.5 to 2% historically. So all in all, a good set of numbers. We remain positive. ICICI Prudential Life Insurance result was also above expectation. Although APE was flattish year on year, the VNB increased 21%, mainly because of margin expansion, which was led by a higher share of protection business, which grew by 29% in terms of APE, and their mix improved to 20% versus 17% last year. So that drove the margin expansion. And we are positive on ICICI Prudential Life Insurance as well. Thank you.
Good morning, everyone. LTI posted its result on Saturday, and the company has posted above expectation numbers for the quarter, with CCQOQ revenue growth coming in at 4.6%. EBIT margin came in at 16.1% versus QOQ of 16.4%. In spite of near-term softness challenge due to economic conditions, management indicates Q3 to be better than Q2 and is confident of being in the leaders quadrant for FY23. Net profit margin guidance is kept same at 14 to 15%. Stock is trading at 30.3 times FY23 EPS. Outlook is positive on the company. Just Dial posted improved set of numbers for the quarter. Unearned revenue came in at 378 crores versus 353 crores. Revenue grew by 10% QOQ and 31.6% year on year. EBITDA margins also improved and came in at 8.3% versus QOQ of 4.5%. Stock is trading at a PE of 16.9 times FY24 EPS. Thank you.
Yeah, good morning. Shree Cement result was below expectation. Sales volume stood at 7.46 million ton versus expectation of 7.13 million ton. Realization came in at 5,068 versus expectation of 5,264. EBITDA per ton came at rupees 701 versus expectation of rupees 839. EBITDA per ton was the lowest in 12 years on account of higher cost and weak realization. Going forward, we can see some revival in the second half on account of price hikes being taken by the company of about rupees 10 to 15 in uh, in September and in October. So we can see the costs have bottomed out, and we will see some revival in the second half. Uh, Kesoram Industries result has improved. Revenue came in at 845 crores versus 891 crores sequentially. EBITDA came at 52 crores versus 30.5 crores quarter on quarter. EBITDA margins have improved to 6.2% versus 3.4% Q on Q. Share is trading at EV by EBIT of 12 times on trailing basis. Apart from this, Birla Corp was declared as the successful bidder for Marki coal mines situated in Madhya Pradesh. The mine has a reserve of 72 million ton, which is expected to provide fuel security and cost optimization to the company. This is positive for the company. Thank you.
Good morning. Bajaj Auto announced its result. The result was ahead of expectation. Revenue came in at 10,203 crores against an expectation of 9,479 crores, which grew by 16% on a YOY basis and 27.5% on a sequential basis. Demand across two-wheelers and three-wheeler segments remained robust in the domestic market and is expected to be good due to the festive season. Bajaj Auto sold more than 11.5 lakh units during the quarter, as against 11.44 lakh units sold in the same period last year, with two-wheeler volumes falling 3.5%, but commercial vehicle segment volumes grew by 13% on a YOY basis. EBITDA margin came in at 17.2% versus an expectation of 15.9%, which grew from 16.2% sequentially and 16% on a YOY basis.
देखो आपके यहाँ कोई चालू है, बीच में डिस्टर्बेंस आ रहा है. Continue.
EBITDA growth and margin expansion was despite cost headwinds and a weak macroeconomic context. Price increases, better foreign exchange realization, and favorable mix offset the material cost inflation and enabled margin improvement. The stock is trading at a PE of 15.8 times FY24 EPS. Thank you.
Yeah, apart from this, Avenue Super Smart, that is D-Mart, has reported numbers, and numbers came below expectations. Sales, we know already company has declared the sales figure in quarterly update. So sales was known, but the key thing to watch was EBITDA margin. And there it has come below expectations. The EBITDA margin came in at 8.6% versus expectation of 9.6%. And quarter on quarter is what 10.3%, and year on year it was 8.8%. So the decline in margin was mainly reflected from the gross margin itself, where the margin quarter on quarter has declined by almost over 110 basis point, and the same got translated into the margins of the at EBITDA level. So this result is, and the valuations are always demanding. Share sees at around 84 times. So share may see some corrections on account of this. Apart from that, Oberoi Realty has reported numbers, though apparently PNL looks below expectations, but PNL, that is revenue, sales, and EBITDA and all are more of a depending on the level of executions, which can remain very volatile quarter on quarter. But if we see the pre-booking, that is new bookings has come very attractive. The new booking has come at around 1156 crores versus quarter on quarter 761 and year on year 867. So the new booking is quite strong, which is indicating that the future business is comparatively strong. Apart from that, mall business had seen some marginal decline quarter on quarter, but that is a seasonal nature. Because of that, it has declined. And even the hotel has reported comparatively better number. So overall seems positive number from Oberoi Realty. Then result for 19. So quite 2-3 consumer companies, that is consumer in the sense electrical consumer companies are reporting number. Havels India is likely to report number, and CG Power is also likely to report number. So the trend is like more of last year same quarter was very strong, which was having a lot of pent up demands. That's why year on year, if we see the results are not reflecting any great growth. So if you see Havels India, revenue is likely to grow by around 8% year on year, and EBITDA margin is likely to be under pressure, and year on year it will show decline from 13.7% to 11.2%. That is mainly because of a lot of increase in the cost related to metal and all. But if you see quarter on quarter, the margin is showing some upward trend. Wherein last quarter it was at around 8.5, which is moving up to 11.2. So in all, if we see revenue growth is muted at around 7-8%, and EBITDA year on year will show some declining trend. So overall seems a bit declining results for Havels India. Similarly, CG Power is likely to show comparatively a bit better number than Havels India, wherein revenue is likely to increase by around 12%, and EBITDA margin is also likely to be better than last year at around 12.2 versus 11.8%. So in all, result will be okay for CG Power. Then DCM Sriram is also likely to report number. Here sugar this quarter is off season, so will show trend declining in this season. Whereas apart from that, if you see even their seed business is also this quarter is off season, comparatively off season. Caustic soda last quarter it was comparatively much better, and we will see quarter on quarter bit decline in caustic soda. So in all different businesses all together will show a bit declining trend for DCM Sriram. Then Inox Laser is likely to report number, though year on year apparently will looks positive because of last year the base was quite low because of the all lockdown restrictions and all. But if we compare as compared to pre-COVID level same quarter, that is second quarter, the revenue are indicating 6% CAGR decline. And also EBITDA margin expectations is also quite low at around 17% versus at that time it was 32%, and even in last quarter it was 36%. So in all, result for Inox Lasers will be declining. We had seen for PVR also the expectations was lower. So seems industry-wise phenomena wherein PVR and Inox both are likely to report declining number. Then Navin Fluorine is likely to report good numbers. Here the revenue growth expected at around 31% year on year, and even EBITDA growth is also expected at around 30%. In this quarter, one of their large contract which company was establishing a new plant has commenced operations. So benefit of that is likely to get reflected into the results, and result is likely to be good. Then Nestle India also likely to show improved results, wherein year on year revenue is likely to grow by around 13%, and quarter on quarter margin will improve by around 300 basis points. So Nestle India result is likely to show improving trend. Then Rallis India is also likely to report improved result. Year on year sales is likely to grow by 14%, and EBITDA is likely to increase by around 17%. Whereas Sagar Cement is likely to show declining trend here again because of the large cost pressure. The EBITDA per ton is likely to decline by around 250 over 250 rupees quarter on quarter. Shopper Stop is likely to show a bit improving trend, though last year was a low base. Year on year revenue is likely to grow by 55% and EBITDA margin is likely to improve from 11% to 7%. But if you take 3-year CAGR as compared to pre-COVID, company is likely to show 5% CAGR in revenue. That shows some improvement as compared to the previous quarter 3-year CAGR. So bit improving results, though lower than the other retail player. Then Syngene is also likely to report a better number. Then Ultratech Cement is likely to report number. Here again, because of the cost pressure, the EBITDA per ton is likely to decline by almost around 340 rupees. That seems comparatively much higher for Ultratech. ACC and all sorry. Even Sri Cement has reported numbers wherein they saw even the decline in realization sharper and some recovery in cost. But let's see how the Ultratech come out with the results. The decline seems to be comparatively quite large as 340 rupees quarter on quarter for EBITDA per ton. Then a few of the financials companies are likely to report number. Wherein asset management company like HDFC Asset Management and Nippon Life are likely to report number. Both are likely to show flattish type of number or marginal decline year on year in revenue and even in PAT level. For HDFC Asset Management, revenue is likely to decline by around 2% and PAT is likely to decline by 6% year on year. Whereas quarter on quarter, it will show some margin flattish trend as compared to previous quarter as well. Similarly, for Nippon Life, the revenue is likely to remain flattish year on year, and EBITDA is likely to decline by around 4% year on year. Then IndusInd Bank is likely to report number. Here, the expectations of numbers are comparatively better. We already know that the advances growth was at around 18% for this quarter. NII net interest income is likely to increase by 17%. PBP is likely to increase by 16%, and because of the lower provisioning, PAT is likely to increase by 55%. So IndusInd Bank result is likely to show improving trend. Max Financial Services is likely to show declining trend, wherein APE is likely to decline by 8% and value of new business is likely to decline by 10%. Then Persistent System is likely to report number. Here constant currency revenue growth is expected at around 6%. And EBITDA margins are likely to show some decline because of the salary increase, but overall result seems improving trend for Persistent System. So that's all from fundamental side. I request technical team to commodity team to take up from here.
Yeah, thank you, sir. Good morning, everyone. On Friday, there was a sharp fall in prices in gold and silver and across commodities. So the pullback for that day is expected. Gold 50,550 to 50,650, and whereby again selling pressure could be witnessed. So today, if one is buying on lower end at 50,300, and one should maintain a stop loss of 50,100, and profit booking is ever advisable on higher end as mentioned on the levels. So all in all, today there could be a both ways movement. So uh, profit booking is advisable on higher end. And similarly, silver, we expect 56,000 to 56,500, whereby again selling pressure could be witnessed. On downside, one can initiate a buy around 55,400, maintaining a stop loss below 54,700. Crude 7,000 seems to be a good support area, but we feel 7,000 to 7,200 should be a trading range. So initially one can buy if it is sustaining above 7,050, and one can book profit around 7,150, 7,200, and initiate a sell also. So again, natural gas 520 is holding as a support area. If sustains above 520, one can initiate a buy with a stop loss of 515, and pullback is expected till 530 to 538 levels. So in metals also, we have seen copper in a range of 647 to 660, and we expect a pullback till 655, 56, and then again a selling could be witnessed. So today seems to be trading both ways. So one can initiate a buy with a stop loss below 47, 647, and one can also sell around 55, 56, maintaining a stop loss above 660 levels. So trading within this range is recommended. Zinc also pullback till 272, 274 is expected, and one can keep a stop loss of 268, and that's it from me. I'll ask Ria to give her views on currency.
Thank you, sir. So on the currency front, USD INR has opened flat. It is currently trading with a green momentum at around 82.45. Look for a breakout of 82.55 to go long into the USD INR, as it is the level that it is facing a strong resistance at. So above 82.55, it could again test or head towards 82.75, 82.80. The support could be placed at 82.26. If it reaches that, it can test the lows of 82. However, taking into consideration the past few sessions momentum, the range for the day could be placed between 80 to 55, 80 to 30. And thus a consolidation momentum could be seen into the USD INR. Same with the Euro INR as well. A consolidation momentum could be seen. The resistance is placed at 80 to 80.53, whereas the support is at 80.18. If the pair reaches either of these levels, it can head or give a directional momentum. Otherwise, it will be in the sideways consolidation momentum. For the JPY INR, bearish pressure will continue. Look for a breakdown of the low of today, which is at 55.51. If it reaches that, it can again head towards the level of 55.14, 55 levels. These resistance is placed at 55.68. Taking into consideration that it has given a gap down, thus a small spike can come into the on the upside. Thus a small buy could be initiated above the level of 55.68 for a target of 55.80, 55.90. But be very cautious and keep a very strict SL at 55.47. However, the longer term view remains the same of going short into the JPY INR from the higher highs. For the for the pound, it will remain in a highly volatile momentum, as there is a lot of fundamental uncertainty that is there into the pound, with political uncertainty, as well as another mini budget release due on the 30th on the 31st of this month. Thus, be very cautious while trading into the GBP INR. The support for today could be placed at 92.46, whereas the resistance is at 93 levels. That's it on the currency front. Thank you.